How is it going, everybody? Today we will be discussing Galileo Financial Technologies and Technisys, two pivotal players in the digital banking and payments landscape. We will explore their roles, the synergy between them, and their future impact on transforming financial services. We will emphasize how these platforms enable the creation of innovative, scalable financial products and how they position SoFi as a leader in the fintech space. So a quick little background here, a little overview. Galileo was founded in 2000. It's a leading financial technology platform that provides the back-end infrastructure necessary for companies to issue cards, process payments, and manage accounts. Galileo empowers fintech companies and banks to launch innovative financial products without having to build the back-end infrastructure from scratch. This offers a quick and cost-effective entry into digital banking. In 2020, SoFi acquired Galileo to strengthen its technology stack and expand its financial ecosystem. Furthermore, SoFi acquired Technisys in 2022, and Technisys, of course, is a digital banking platform. This acquisition complements Galileo's offerings by enabling end-to-end digital banking capabilities. Galileo's three services are essential for fintech innovation. The first one being card issuing, which enables companies to issue various types of cards, such as debit, credit, prepaid, both physical and virtual, integrating seamlessly with card networks, such as Visa and MasterCard. Second being payment processing. This supports real-time transactions and multiple payment types, ensuring smooth and secure financial operations. And lastly, API-driven solutions, which allows businesses to build and integrate customized financial products with functionalities such as account creation and transaction management. So let's break these down just a little bit. In regards to card issuing, Galileo provides the technology and infrastructure necessary for companies to issue various types of cards, like I said, including debit, credit, and prepaid cards. The process involves creating and managing cardholder accounts, generating card numbers, and linking cards to customer accounts. It supports both physical cards, which are mailed to customers, and virtual cards, which can be issued instantly for online purchases. Galileo's platform integrates with multiple card networks, ensuring seamless transaction processing. Card issuing generates revenue in two ways. Issuance fees, a fee for each card issued, either flat or tier based on volume, as well as account management fees, which are charges for managing cardholder accounts, including features like fraud detection and card reissuance. So what are the key components of card issuer processing? This is a little boring now, but I promise this will get a little bit more interesting once we start to get to the payment processing. But just stick with me for now. So the first one is card management system. This system manages the cardholder accounts, including card maintenance, account information, and transaction history. Second is the authorization system. This authorization system is responsible for checking whether a transaction can be approved based on factors such as available funds, credit limit, and fraud risk. Third, clearing and settlement system. The clearing and settlement system facilitates the movement of funds between financial institutions. And again, we'll talk a little bit more about this once we get to the payment processing side. This ensures that merchants receive payment for approved transactions and that the funds are properly debited from the cardholder accounts. Lastly, we have fraud detection and prevention. Fraud detection and prevention tools are crucial components of issuer processing, providing real-time monitoring and analysis of transaction data to identify potential fraud risks and prevent fraudulent transactions from being approved. Together, these components provide the infrastructure and tools necessary to manage electronic payment transactions, ensuring that financial institutions can provide fast, reliable, and secure payment processing services to their customers. All right, so we talked about card issuing. Let's go a little bit deeper into payment processing, which was the biggest question that I had when I started to do this research. So Galileo facilitates the movement of money between accounts through various payment rails such as ACH, which is Automated Clearinghouse, direct deposits, and card transactions. It supports real-time transaction processing, which is crucial for neobanking and fintech apps that require immediate fund transfers. Galileo handles complex payment scenarios like split payments, recurring bills, and international transactions, ensuring compliance and security. Now, this payment processing really generates revenue in two ways. First is a transaction fee, which is a small fee per transaction. It's either a fixed amount or a percentage of the transaction value. And then interchange revenue, which is a portion of the interchange fees collected by card networks. And we will definitely go into these in a little bit more detail later. But just for simplicity's sake, this is how payment processing generates revenue for Galileo. All right, so before we move on, I think it's important to understand a few of these terms, the payment processing terms. Understanding the roles of different entities involved in the card payment process is really essential for grasping how transactions work. So let's just quickly go over a couple of these. So merchant, that's the business or individual selling goods or services like a restaurant or an online store. Merchant accepts card payments from the customer. So then it goes to the acquirer or the acquiring bank. The acquirer processes card payments on behalf of the merchant. It holds the merchant's account and connects with the payment network to get transaction approvals. Then there's the acquirer processor. And before I go on, we'll see sort of an example of this whole process in a slide or two. So it will make a little bit more sense. So there's the acquirer processor. This is the company that handles the technical side of the transactions for the acquirer. It securely transmits transaction data between the merchant and the acquiring bank. So examples would include Toast and Square. Then there's the payment network, organizations like Visa or MasterCard that route transaction information between the acquirer and the issuer. They ensure the transaction request reaches the right bank for approval. Then there's the issuer, or the issuing bank. This is the bank that issued the customer's payment card, like Wells Fargo or Citibank or a fintech like Chime or even SoFi. It verifies the customer's details and funds, approves the transaction, and transfers the money to the acquirer. There's the issuer processor, which is a platform like Galileo that helps issuing banks manage cardholder accounts and transactions. It checks for available funds and ensures the transaction is compliant and secure. So we'll see here in a slide or two that each of these players work together to complete a seamless and secure transaction whenever a customer uses their card to make a purchase. All right, so let's do just a quick little example here. I think that'll help make some of the terms make sense. And that way you'll have a good understanding of sort of Galileo's payment processing and how it's involved in the whole process. So we'll start with the cardholder, the customer. In this particular case, we'll call him John. And John wants to buy a $50 meal from his favorite restaurant. John is using his Chime debit card, which is linked to his account with $1,000 in it. Chime, a fintech app, issued John's card using Galileo technology. Chime is a customer of Galileo. So, step one, the customer makes a purchase. So, John swipes his Chime card at the restaurant's point of sale system. Next, the merchant processes the payment. So, John's card details are captured and they're sent to the acquiring bank or the acquirer. Think of the acquiring bank as the merchant's bank, like Bank of America. And they're really handling the transaction on behalf of the merchant. So then the transaction is sent to the payment network. The acquiring bank, so the acquirer still, forwards this authorization request to its acquirer processor. The acquirer processor sends the authorization request to the correct payment network, such as Visa or MasterCard. So going on to the payment network. These networks act as a traffic controller of the payment world, making sure that the request reaches the right issuer bank. So now we're going to go. So Visa or MasterCard sends the transaction details to the issuer processor to see if John has enough funds in his Chime account. Galileo, so the issuer processor in this particular example, confirms that there's $1,000 available. So Wells Fargo, the issuer, authorizes the payment and sends the approval back through the payment network. So the merchant receives confirmation. The approval message travels back from Wells Fargo through the payment network, such as Visa or MasterCard, back to the POS system with the merchant. And now John knows that his payment is good to go, and John can enjoy his meal. So then when all this is over, at the end of the day, Bank of America, so the acquirer, the bank for the merchant, and Wells Fargo, the issuer, so the bank for the customer, complete the final steps called settlement. Through the payment network, they transfer $50 from John's account to the restaurant account at Bank of America. And that's it, really. Each player, the customer, merchant, acquirer, payment network, issuer processor, and issuing bank, has played their part to ensure a smooth, secure, and efficient transaction. This process sounds complicated, but it happens in just a few seconds every time you swipe your card. This really shows how seamlessly all these entities work together behind the scenes. So who makes the most money when a card is swiped? Let's take a closer look at how the $50 you spend at a restaurant is divided among the different players involved in the card payment process. Each entity is going to earn revenue from the transaction through various fees. So let's go through each of those. First is the interchange fee. The interchange fee is a transaction fee that the merchant bank pays to the cardholder's bank every time a customer makes a purchase using a credit or a debit card. It typically represents the largest component of the total fees paid by the merchant. Now, this is what Galileo said, but from my research, it looks like maybe the merchant service provider fee is going to be the highest. But we'll get to that. So the largest portion of the interchange fee, so this is broken down inside the interchange fee, goes to the issuing bank. So the bank that issued the card to the customer. In the example of a $50 transaction, this is typically about $1.20 to $1.40. Yeah, I think the important thing to know is that in the interchange fee, the issuing bank is going to be making the most money when it comes to the interchange fee. So, for example, if you have a SoFi debit card, every time you swipe that, SoFi will be getting that large portion of the interchange fee. Also in the interchange fee is a card network fee, which is much smaller, and it's the portion that goes to the card network, so Visa or MasterCard. And that's for routing the transaction between the acquirer and the issuer, so the merchant bank and the issuing bank, the cardholder's bank. That's usually 10 to 15 cents, so much smaller. So after the interchange fee, there's also the merchant service provider fee. So this one's usually a pretty large fee as well. Merchant service provider is going to be someone like Toast or Stripe. So a small portion of the processing fee is retained by the acquirer for facilitating the transaction. It is often bundled with the overall processing fee. So that's 10 to 15 cents. So the payment processing fee. The main part of this fee goes to the payment processor. So again, Toast or Stripe, for managing technical aspects of the transaction, including secure transmission of the transaction data, compliance, and customer support. Now this is the big one. So this is typically around 2.5% to 3% of the transaction. So again, for $50, it's about $1.50 to $1.75. So just to recap that, so that was the merchant service provider fee, which encompasses the acquiring bank fee, which is small, about 10 to 15 cents. And then the big one is the payment processor fee. And that's for Toast or Stripe or a lot of those POS systems. Third is other fees. These fees are not directly part of the interchange fee or the processing fee, but are associated with the use of specific platforms and services. So, where Galileo comes in, the issuer processor fee. A small fee charged by technology providers that support the issuing bank. This fee is generally paid by the issuing bank, not directly by the merchant. And this would be typically 2 to 5 cents per transaction. So this is a flat fee. And then the fintech company, other associated fees, a portion of the interchange fee may be shared with the fintech company if they have a partnership with the issuing bank. This is not an additional fee for the merchant, but part of the revenue distribution of the interchange fee. So 10 to 20 cents for that transaction. So in summary, the interchange fee covers the issuing bank fee and card network fee. It's a separate fee from the merchant service provider fee. Next, the merchant service provider fee covers the payment processor and acquirer's fee. It is generally 2.5 to 3% fee charged to the merchant. And then third, other fees like the issuer processor fee, Galileo, and fintech company fee are typically not directly paid by the merchant, but are part of the overall fee structure in the background. Technisys provides a digital banking software platform with two primary products, Cyberbank Core and Cyberbank Digital. These solutions enable banks to manage core functions like account management and digital channels such as mobile and online banking. With a cloud-native architecture, Technisys allows financial institutions to rapidly innovate, delivering personalized, digital-first experiences that meet the evolving needs of their customers. So Cyberbank Core is a core banking platform designed to manage the fundamental banking operations for financial institutions. It serves as the technological backbone for banks, supporting key functions such as account management, transactions, loan processing, and other core financial services. Some key features of Cyberbank Core: it handles essential functions like saving and checking accounts, loan origination and servicing, and deposit management. It enables real-time transaction processing, providing up-to-date account balances and immediate transaction visibility. Offers a flexible modular structure, allowing banks to add or modify services without disrupting the entire system. This makes it easier to integrate new products and services as market demands evolve. It's also cloud native, so it's built with cloud technology, allowing for scalable and cost-efficient operations. Financial institutions can rapidly scale up or down based on customer demand. It also supports compliance with various regulatory standards and requirements, making it easier for banks to adapt to changing regulations. Cyberbank Digital is a digital engagement platform that provides banks with the tools needed to deliver personalized digital experiences across various channels such as mobile apps, websites, and chatbots. It focuses on enhancing the customer's experience by offering digital-first services and seamless integration with the bank's core systems. Some key features include omni-channel banking, which allows customers to access their banking services through multiple channels, including mobile apps, websites, and social media. It also ensures a consistent and seamless experience across all digital touchpoints. It also offers personalized customer experiences, uses data analytics and AI to deliver personalized services and recommendations to customers based on their behavior, preferences, and financial needs. Cyberbank Digital also offers product management. It enables banks to quickly create, deploy, and modify digital financial products such as digital wallets, investment products, and lending services without extensive development efforts. Cyberbank Digital also offers rapid innovation by providing a platform for banks to experiment with and deploy new digital services and products quickly, helping them stay competitive in a fast evolving market. It also integrates with Cyberbank Core, seamlessly integrates with Cyberbank Core to offer a unified platform for both core banking and digital engagement, enabling end-to-end digital transformation. When used together, Cyberbank Core and Cyberbank Digital provide a comprehensive end-to-end digital banking solution. Cyberbank Digital builds on the robust foundation of Cyberbank Core, offering a unified platform that connects back-end operations with customer-facing digital experiences. Banks can quickly launch new digital products and services using the flexibility and scalability of Cyberbank Core, paired with the agile and user-focused features of Cyberbank Digital. By leveraging real-time data from Cyberbank Core, Cyberbank Digital can offer more personalized and responsive services, improving customer satisfaction and loyalty. Overall, Cyberbank Core focuses on the core banking operations, while Cyberbank Digital enhances customer interactions through digital channels. Together, they provide a complete solution for banks looking to innovate and transform their digital banking capabilities. Galileo generates revenue through card issuance fees, transaction processing fee, and API access fees. Technisys, on the other hand, earns from licensing its core banking platform and subscription fees. Together, they create a robust financial ecosystem with multiple revenue streams, supporting the growth and scalability of digital financial services for a diverse range of clients. Galileo and Technisys provide a comprehensive end-to-end banking solution. For instance, a neobank can use Galileo for card issuance and payment processing, while relying on Technisys for managing core banking functions like loan processing and customer accounts. This partnership allows for rapid development and deployment of new financial products, offering a scalable and efficient solution for digital banks. By owning Galileo and Technisys, SoFi can deliver a broader array of financial services, such as digital banking, loans, and investments under a single platform. This not only enhances SoFi's product suite, but also positions it to offer its advanced financial technology solutions to other institutions, opening new revenue channels and solidifying its role as a leader in digital finance. As digital banking and embedded finance continue to evolve, Galileo and Technisys are poised to play pivotal roles. Their platforms enable the rapid development and deployment of financial products, offering personalized and seamless digital experiences. This positions them as foundational technologies in the future of the financial services industry, supporting the ongoing transformation towards innovative and customer-centric solutions. In conclusion, Galileo and Technisys are the technological backbone of fintech innovation. They enable companies to create and scale new financial products rapidly and efficiently, driving the future of digital finance. I want to thank everyone for listening to this long presentation. Please like and subscribe. Subscription is free, and it lets me know that there are people out there that are actually following my content. I plan on making much more content like this as I continue to research SoFi Technologies. So again, thank you very much for staying, and have a good day.